Hello, my name is Eddie Tofpik. I'm Head of Technical Analysis and Senior Markets Analyst at ADM Investor Services International Limited. Here's your daily technical analysis of LME 3-month copper and aluminium. I'll start with LME 3-month copper. A second bearish black crow yesterday, coming as it did after the recent indecisive doji cross and earlier immediate countering bearish dark cloud cover pattern and bearish opening black Mariposa plus, and I say this again carefully, a bearish belt hold pattern. I'm prepared now to call the bearish belt hold pattern as the real thing, along with the pipe top formed over last weekend. Why is this all important? It is very simple. As you know, I've been very cautious about the belt hold pattern recently because it is one of the most powerful bearish candlestick patterns known. And its recognition, if it is true, and it is so, will now likely have a seismic implication. Overall, the earlier recent action had been a trigger to a new, possibly large pattern. The market previously punched up through the second of two overhead congestion bands I had mentioned earlier last week, and I quote, two overhead congestion bands, the first between 81.77 to 82.39, and the second between 83.50 and 84.24. In between them, we have the late August high at 83.18, end of quote. Prices even went as high as just over the 50% Fibonacci line, the October 2020 to March 2022 move at 85.56 for a second consecutive session. However, the move was not sustained, and it is this lack of sustainability that has troubled me, especially as we closed yesterday well below both congestion bands. This had earlier put at risk what I had previously seen in the action since June to date, a possible big W pattern. Now, the big W pattern is a derivation of the double bottom, but on a larger scale. I'd previously indicated the primary target X for this pattern in the 1990 area, and the secondary harder to reach target X1 in the 9750 area. This is now the fourth session that has placed a question mark over all of this. I'd earlier said it was important to see what happens should prices drop down to the January 2021 high at 82.39 and advised caution. We now have our first close below this level, and I'm minded to seek maybe one or two more consecutive closes below 82.39 and then retire this whole big W pattern idea. Still caution on all of this. So far today, a slightly higher opener, test up to the 81.77, 82.39 congestion band overhead, seemingly to gather ammunition for what looks right now as a test lower towards the lesser Fibonacci line at 80.16. We now have to look below 8,000 for further support in the 78.92 to 78.79 area, and then at the lesser Fibonacci line at 77.75, and at the combination of the rising short medium moving average, currently 77.34, and a flatlining medium moving average, currently 77.39. LME 3-month aluminium. A second bearish black crow yesterday, and a suitable follow-on lower to the previous session's bearish engulfing pattern, though I suspect the action had aspirations to be a hammer pattern. This is a continuation lower from the tweezer top type action made over the past weekend. Prices this time dipped down to just short of the June 2018 high at 23.53, and a nearby flatlining medium moving average, currently 23.37. These two are seemingly creating their own congestion band at the moment. This now places a really big question mark over the recent idea of a late August to early November diamond bottom pattern, something I've been harping on about for a while now. So, I previously indicated potential upside targets for this diamond pattern. The issue with this is that the primary target X in the 25.60 area is just on the edge of a series of four congestions that could effectively be seen as one, and the secondary, harder to achieve target X1 in the 26.52 area is well within this congestion. Thus, we have congestions at 25.63 to 25.81, 26.08 to 26.22, 26.50 to 26.75. Things continue to not look that good for the targets above for the diamond pattern. What happens at the medium moving average over the next few sessions will determine whether I keep or retire these upside diamond patterns. Targets for them anyway. So far today, a slight move lower but within yesterday's range and not approaching the June 2018 high below at 23.53 as yet. Thank you for listening. This short version broadcast gives essential market patterns and consequences. Please be aware of the risk disclaimer posted with this broadcast. Copyright is Eddie Tofpik and ADM Investor Services International Limited. And here comes the final bit.